Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending March 31st, 2023. Looking at the market indexes for the week, the TSX, S&P 500, Dow Jones, Nasdaq, and Russell 2000 were all up for the second week in a row. Oil and gold were all up significantly as well. Oil up to $75 a barrel, or about 10% gain for the week. So quarter one for 2023 is in the books. The Nasdaq, which was walloped last year as the Federal Reserve kept hiking rates, is up nearly 15% for the 3-month period, while the broad S&P 500 is up more than 5%. The Dow, however, is down nearly 1% for the quarter, although so far it's advanced in March. The TSX is up over 3% for the quarter. Let's look at Canada first. The federal budget for Canada was released on Tuesday. There's a revenue hit that the federal government is projecting due to a slower economy to the tune of $5 billion lower revenue year over year. The projected spending over the next couple of years is increasing by 5 to 7 billion each year relative to Ottawa's fall economic statement. The return to a balanced budget keeps getting pushed further and further. There is a divergence from the government's fall economic outlook. There's no change to the capital gains inclusion rate. It stays at 50%, which is great news for investors. There is a new tax on banks, however, but that didn't seem to impact the share price of the big banks. This is to treat dividends received on Canadian shares held by the financial institutions in the ordinary course of their business as business income. Until now, those dividends the institutions received were effectively tax free since they are not treated as business income. Now they are. The budget seems to be keeping the spending at a level that is not causing additional inflation, meaning it's neutral, rather than pumping up the spend. We had Lululemon reporting on Tuesday, and they beat the expectations on the top and bottom line with a very solid earnings report for Q4. Turning to the US, the First Citizens Bank agreed to buy 72 billion of Silicon Valley's banks loans and deposits on Monday, which seems to have brought calm over the markets and caused First Citizens Bank shares to soar because they are getting the asset at a $16 billion discount. And the required congressional hearings begin into the SVB issues, talking to the bank and to the regulators. The issues with the banks in the US have been indirectly caused by the US Fed raising interest rates. Banks invest in, quote, safe bonds, but as interest rates go up, the bonds become worth less, causing the bank to take losses. The Fed therefore, quote, broke something with the rate hikes, but only very indirectly. The banks just made bad investing decisions. As one bank has losses and people pull their money in a run on that bank, other banks' weaknesses are also exposed. This is the feared contagion. The institutions will be more careful in their lending, slowing down the economy, and people will borrow less because of the general uneasy environment, further slowing down the economy. Indirectly and almost accidentally, the central bank interest rate hikes are slowing the economy. And due to the bank problems, the central banks will need to raise interest rates less since inflation will be lowered by the slowing economy. We had a US initial jobless claims report, and they came in at 198,000 for last week, higher than the expected 196,000. The US GDP growth quarter over quarter for Q4 was a strong 2.6%, less than expected, but definitely above zero. The US electric vehicle sales have increased in 2023, partially due to new U.S. tax credits that can make qualifying cars up to $7,500 more affordable. Tesla also announced major price cuts in January. Ford then followed a few weeks later, slashing sticker prices for models of its Mustang Mach-E SUV. The combination of the tax credits and the lower prices in January have spurred buying activity. In February, EVs accounted for 8.5% of all new vehicles that were leased or sold, which was a record high according to a new report from JD Power. That figure compares to a 4.9% market share for EVs for February 2022 and a 2.4% market share in February 2021. So EVs market share is increasing, but is still less than 10% of new cars being sold or leased. Staying with EVs, Ford is now raising prices for its flagship EV, the F-150 Lightning pickup. The vehicle is the centerpiece of Ford's attempt to transition its business towards an all-electric lineup. The lower-cost Lightning Pro, intended for fleets, will now start at under $60,000, while the mid-level truck starting price jumped to just under $76,000. The starting price for the Lightning's top line trim increased slightly to just over $98,000. Looking at the House of the Mouse, Disney's CEO Bob Iger told employees Monday that the company's planned layoffs would begin this week. Overall, the company aims to cut 7,000 jobs across its operations as it looks to shed more than $5 billion in costs. This week brings the first of 3 rounds of layoffs. The second round of layoffs in April, Iger said in a memo, will be bigger. The company hopes to wrap up the job cuts with a third round before the summer, he added. Since Iger returned in November, he has reorganized Disney into 3 segments, including designating ESPN as its own unit, and suggested he's open to selling the company's majority stake in Hulu as a part of a push to focus more on Disney's core, family-oriented brands. Now for some bits and pieces. The Chinese tech giant Alibaba said Tuesday it plans to split into 6 distinct businesses, each of which will have the ability to raise funding and explore initial public offerings. It's the most dramatic change for Alibaba in its history, and it will trigger a jump in the company's stock. The reorganization comes amid signs that the Chinese government is again warming up to the country's technology industry as it faces increasingly heated rhetoric and competition from the US. The 6 units, and forgive me for the pronunciation, which will each have their own executive leadership, will be Cloud Intelligence Group, Taobao Tmall Commerce Group, Local Services Group, Seinayo Smart Logistics, Global Digital Commerce Group, and Digital Media and Entertainment Group. Now looking at next week, we still have a few companies reporting. On Wednesday, we have Tilray. On Thursday is Constellation Brands. Economic events next week. On Tuesday, we have the U.S. JOLTS job openings. Wednesday is U.S. oil inventories. Thursday is U.S. continuing jobless claims and initial jobless claims and Canadian job numbers. For Friday, we have Good Friday, and the U.S. has the U.S. hourly earnings where we get a read on wage inflation. That concludes my thoughts for the week. If you have any requests on what you would like me to cover in future videos, please put that in the comment section. And if you would like to get in touch, please reach out on any of the social media channels, and may you have a profitable day.